Welcome to TheoTrade. This is Don Kaufman. It's March 1st, 2024. It's a Friday afternoon doing the weekend update here. When selling starts, markets could get downright wild. That's actually going to be the topic of conversation here on this weekend's update. Let's get right to it. So we still have a few hours left in the trading session, but I got to tell you, price action, it leaves a lot to be desired, which just keeps coming up on my mind. You want to know what keeps me up at night? Oh, the fact that the entire market right now is, well, literally resting on the back of, and then there were, I don't know, two, maybe three underlyings. And that's a huge portion of what we're going to discuss in this weekend's update. Now, in no uncertain terms, by mentioning like, hey, look, when selling starts, it's going to get downright wild. I'm not trying to proclaim like this is it. This is the timing of it. Okay. The one aspect that you have got to be aware of in this marketplace is that the risk just continues to barrel down on us. Like we're just marking time right now in this market, and there are a lot of signs of areas that are becoming dramatically weaker, with markets continuing to rally. I mean, everything from like market internals, but people are caught right now, and they're caught maybe, I don't know, a little bit in what we would term like NVIDIA fever. You got to realize like today, like specifically today, and again, I wasn't going to talk too much about intraday trade, but today it's the whole marketplace. It's NVIDIA, it's Meta, and that's all you got. I mean, you've got Apple right now off by 1.3%, which we'll discuss here. I was talking about it on the Wednesday night video, but Apple off, okay, decent amount. You imagine if Apple was up, this marketplace would be flying. But there's nothing behind it. You look at the entire financial sector, it's down today. Okay, what else you got? Google. Google I was talking about on Wednesday night's video too. Google it's not, just down and out. Google is, almost double its expected move this week to the downside. And I was mentioning Apple moments ago. You look at Apple, okay, this is exactly what I talked about in the Wednesday night video. Apple cracked, okay, outside of its expected move. And this brings us to the first topic of conversation. It's just, what do you really think is holding this marketplace together right now? And I know that we can constantly mention, some of the stocks that are maybe a little bit off the beaten path, like, today, there's Dell fever going on today. This thing burst to the upside, but no, come on. What is this, a $80 billion market cap? Let's get crazy. Let's go maybe look at like AMD, and AMD, fierce move to the upside. But again, when it comes to market capitalization, what's this going to do for you? $300 billion company? You got to be kidding. Like, stocks like NVIDIA, like, Meta, they're moving that in like in a day. Earnings are actually moving that. So what is really holding this market together? Oh my, look, you're not going to have to go too far. You're not just going to have to go too far, because you start looking at stuff like Microsoft. All right, you got me here. Microsoft, it is up. It is up on a year-to-date basis, okay? And it's up to the tune of about almost 12%. But right now, well, really over like the last, and if you look at like this auto expected move is such a cool tool, because you look and you're like, you're kind of in the same range for like 1, maybe 2, 3, 4, 5. This is 6 weeks. Okay, you want to get crazy? Let's call it like 5 weeks inside of a very similar range. So Microsoft, it's not been taken out by any stretch of the imagination. Okay, but it's definitely kind of flattened out. As we were mentioning, like Apple now is not just down on the year, but it's now at almost 4% in the year. Okay, Amazon. So Amazon got me here. Amazon's up almost 20% a year-to-date basis. So we have a little bit under here. Okay, we were mentioning Google. Google has actually dropped below possibly a very key threshold here. It's now unchanged on the year. People, it's Meta. Okay, it's NVIDIA. Okay, there's no Tesla left anymore. It's down some 18%. There's no question that Tesla can rally. Tesla can cause a bid under the marketplace, but I mean, you have sectors that are still moving higher, like, for instance, financials. But financials have kind of meandered throughout the course of this week. But really, come on, financials are still only up like 6%. Okay, you look over at the energy sector. It's a huge bid today, but it's still only up like, 2.8% in the year, and you can bring up every other sector. I mean, look, all other sectors combined, they don't equal, okay, an Nvidia and a Meta. And that's why the kind of chaos. And that's why I say, like, when selling starts, what do you have to rely on? All right. One of the first things that I want to bring up in here, because again, what's holding markets together? Two, maybe three stocks. If you really want to count, maybe four. There's no more Magnificent Seven. Okay, let's see if we rotate back into some of the stocks that are getting beaten up. I can make an argument that maybe we'll rotate back into Apple, but if we rotate into Apple, it might be at the at the cost of Nvidia seeing some sell side activity. Or, for example, we might rotate back into Apple, but they may start selling Meta. Okay, this is a huge and critical concern right now because you're losing the base of the marketplace. There's a lot of marquee stocks in here, like, that's in the Dow, obviously, is Boeing. And, oh, okay, you're pointing out one stock. I'm not pointing out one stock. Okay, Caterpillar, no, this one's flying. It's just not enough market cap to really keep us up over here. Walmart, okay, has also been flying high, but that's a conversation piece. Walmart actually looks like a tech stock with the volatility right now. Looking at stuff like Starbucks in here, okay, that's just, things are getting crazy in here. There's just, again, no matter where you look, there's not a lot of products, okay, holding this market together. You have Meta and you have Nvidia and you have a handful of others, but the issue is the others are following in the footsteps. So when you start to mention like Nvidia, okay, so what's following Nvidia? AMD, definitely Dell's riding on the coattails of AI. Okay. Again, we can go on and on and on, and Broadcom and all of these stocks, they're all riding the coattails. Okay. If you see sell side activity in Nvidia, what else you got? You got nothing. And that's why I'm telling you right now, when selling starts, and selling will start, okay, markets are going to get downright wild. Let me show you something else that I find, well, very, very interesting. In this case, I'm going to go in, I'm going to put in the spiders and actually built a style for us here. So when I go load style, okay, I built what's a comparison between spiders, diamonds, which is Dow, and the QQQ, okay? And, well, what I think is a bit alarming in this case, and I'll explain exactly what we're looking at here, is, well, simply put, we have the spiders as our primary symbol, okay? Primary being right here, that would be the SPY, okay? This is the diamonds. If you're not familiar with the diamonds, it's basically the Dow, okay? And last but definitely not least, the big performer over here is the QQQ. It's the NASDAQ. All right, so in a comparison chart, one of the things that's so critical is looking at time frame. Right now, okay, this happens to be a 5-year weekly chart, so it's a 5-year weekly. Look at the divergence. Okay, let me take everything off the chart. Look at the divergence. For 5 years, you still have the Dow up 55%. The S&Ps are up some 86%. The NASDAQ is basically up 160%. Now, yeah, I'm going somewhere with this one. If you actually collapse down some of the time frames in here, let's go to 1 year. Okay, and 1 year, yes, you absolutely still have the Dow up and the S&Ps are up and the NASDAQ is up. And now we're really going to start to tighten up the time frame, okay? Because one of the things is we're seeing a big divergence right now, okay, in the shorter time frame. And what I mean by that is, look, here's the NASDAQ, and the NASDAQ started getting volatile and going down. The other indices kind of followed. But right now, the divergence is, well, remarkable because the Dow is actually flat to down. The S&Ps are still getting pulled up, and the NASDAQ is exploding. We have, okay, a pretty critical divergence in the shortest duration. And I'm actually going to go to like a 30-day, 1 hour. I know it's weird because it's like overnight trade and so forth in here, but I want you to see it. I want you to see it because major indices continue to perpetuate moves, okay? The Dow, again, the Dow specifically over here is being dragged along, kicking and screaming, right? This is something to seriously consider because what? The Dow does not have market, okay, capitalization involved. And what I mean by that is when we start to look at things, okay, in terms of like market capitalization, all right, market cap and market cap weighted simply means your market cap. For example, Microsoft, right? Microsoft's the biggest monkey on the block. It's the gorilla. You look at something like Apple. It's one of the biggest monkeys on the block. They, okay, carry tremendous weight inside of the S&P 500. But when you actually look over at the Dow, that's not the way the Dow works, okay? The Dow has to do with price increment moves, okay, and a Dow divisor. It's very different. The interesting irony of that is, to a degree, maybe the Dow has a degree of accuracy in this, because what's going on right now is capital just being shoved, okay, right down the throat of one of your biggest market caps. Speaking of market caps and market capitalization, okay, I think you guys will actually find this rather interesting. So not often that I actually bring up kind of a slide during one of these update videos, but I put this one together. One of the first things I wanted to show you is that 5 companies, okay, 5 companies are approximately 24% now of the S&P 500, which, people always talk about like, well, this time is different. This time is different. Yeah, this time is different. We have concentrated risk like we've never seen before. And I was talking about that in last weekend's update where I was calling it the one stock market. Okay. Situation right now is people, it's hitting ahead. You have 24%, okay, of all of your market cap packed into these 5 companies, which of course are Microsoft, Apple, Nvidia, Amazon, and Meta. And what's really driving the market right now? Well, number 3 and number 5, which have actually climbed in the ranks dramatically. You don't see a Google on there anymore, do you? Okay. This is all kinds of chaos, because when you start to put numbers to it, you're like, oh, whatever, man, 5 companies are 25%. I get it. Yeah. Of a $42 trillion S&P 500. That's the market capitalization, literally, as of today. Your $42 trillion market, but 25% of it is packed, okay, inside of these 5 companies. Now, does that leave you warm and fuzzy? Oh, of course not, okay? What are you going to do about it? Anything you do right now, I think you really want to stay, again, and I keep reiterating this, stay in defined risk positions, okay? Especially if you're going to be directional in nature. That doesn't mean if you sell premium, that's a little bit non-directional, but if you're directional in nature, you really, okay, you got to consider going out there and kind of defining your risk. And it's, at this point, you're like, is it okay to be long the market? It is, but you're going to have some type of a hedge, right? You really have to mitigate risk in some way, shape, or form right now, because you've got, as I said, like it's only going to really take, okay, a Meta starting to see sell side activity coupled with an Nvidia, and that's it. And then there were 2, okay? And when that actually transpires, I think initially we'll see some rotation, meaning that when you start seeing Nvidia sell off, I honestly do think that, hey, maybe they'll try to actually rotate back to Apple initially, okay? That trade, though, could fall apart very, very rapidly. And then markets get into, well, what I said a moment ago, they could get downright wild. One of the aspects that I'm also watching right now is you got a marketplace, and today is a perfect example. You got a marketplace up 33 handles. Again, based on what? Oh, is this the financials? No, it's not the financials. Okay, I'll give you this. Energy's actually bid today, but energy hasn't done anything in the year. The only problem with energy, I can make an argument, okay, that energy being bid, it's incredibly inflationary. If you haven't looked over at, oil lately, oil just cracked $80 a barrel, okay? You want to talk about inflation? It could be coming back. So I can make an argument that energy being bid right now is not a positive for the marketplace. Nevertheless, you have the markets ripping today, okay? Again, largely predicated on effectively 2 stocks, okay, of which everybody needs to take that step back and really think about, we're losing a grip just completely on market reality in here. Now, where I was going with this is I also noticed, I said, volatility isn't down today. In fact, when I started looking a little bit deeper into here, okay, I noticed that volatility is just ever so slightly bid. And again, there's a couple of hours left in the day, but I've noticed this kind of trend with markets up, volatility is no longer falling over here. We're in a situation right now where trade, okay, can appreciate that even a marketplace going up, risk is still coming in. And again, I want to make that very clear that in no uncertain terms, this is not me trying to bear up. This is me just simply saying when this thing does get going on the sell side, and it will, okay? Don't be one of the people that's lost their grip completely on reality. The market, okay, has lost its grip on reality. You have two stocks that are running the entire S&P 500, okay? When we're actually looking at trading firms firing, okay, into these. And by that, I simply mean like if you haven't looked at the option volume on these products lately, again, forget about what you think of the marketplace. Forget about, any fundamentals. How can you even look at fundamentals, all right, when bad news that comes out in the marketplace is good for the market, right? That's the fundamentals. You got to push them aside. You got to start paying attention to stuff like, hey, wow, Meta is trading 500,000 contracts today. NVIDIA, okay? NVIDIA, you're like, oh, well, I don't even know 500,000 contracts is a lot, okay? NVIDIA today is doing almost 1.7 million contracts. It's an $800 product. It's an $800 product doing almost 1.7 million contracts, and we got a lot of time left on the clock. So bear with me on that thinking over there, because this is all kinds of crazy. You realize yesterday the market did about 48 million contracts. Today, we might do as many as 50 million contracts, okay? You may get 2.5 million contracts just out of one product, okay? Everybody is turning all their firepower towards just a handful of products in here, which is, again, that's what's inflating markets. That's why I'm saying we've not losing the grip on reality. We've lost it. We've lost it. And I think that it just creates, okay, this magnitude of risk that's almost hard to be able to get your arms around. Now, how you position yourself is going to be completely up to you. And we'll give you some trade opportunities, of course, all throughout the course of next week here at TheoTrade. But it's critically important. You got to look at what you think is holding markets together. You got to look at, hey, have we completely lost our grip on reality? Because 5 companies are now 25% of a $43 trillion S&P 500. Okay, some questions to think about and kind of ponder over the weekend. All right, last but definitely not least, we look to the SPX. Each and every week, of course, we talk about SPX. We talk about expected move. And the reason we do so, that expected move helps us actually handicap, okay, forward risk. All right, one of the things I want you to see, just put it in perspective. All right, where did we start our day? As of this morning, the market was massively unchanged. We actually got going to the upside, okay? We're running. So where, okay, is the upper edge of the expected move? Upper edge of the expected move. Let's say things got wild for the remainder of the day. 51, 53. Well, okay, another 20 handles to the upside. Nevertheless, throughout the course of the week, your entire trading week has really come down to like the last few hours of trade that, again, are being perpetuated by Meta, okay, and NVIDIA. The bigger question, though, is next week, there's more economic data coming out next week. Now, granted, something we've also been mentioning extensively is that economic data now moves the market less than individual equity products. Again, another sign that you've lost your grip on market reality. You think about that one for a second, because you even got March 8th jobs numbers coming out. All right, the employment situation, it is going to be chock full, okay, of data points next week. JOLTS numbers are coming out, which is also fairly critical to the Fed. Okay, different construction numbers, people, okay, data points kind of galore. What are we looking at in terms of an expected move? Now, granted, the expected move is not set as of yet. And I want to make that clear. The expected move is not set yet. Okay, we still have plenty of time left in this trading session, and we will, of course, include at the bottom of this video the expected move. Nevertheless, right now we're looking at plus or minus almost $70. Okay, we're coming off of a week that had $64 of price action. One thing I want you to keep in mind, okay, this week the market looks like it's going to end higher. Okay, not necessarily dramatically higher, but it looks like the week is going to end higher. And yet, okay, the expected move has actually picked up ever so slightly, okay, but we have a market right now that is rallying with volatility increasing. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye bye.